The country with the world's largest proven oil reserves is now publishing its oil prices in yuan. Venezuela says the switch to Chinese currency is part of a push to become free from what it calls the tyranny of the dollar.
Venezuela cannot risk its economy. 97% of the dollars that enter the country come from oil income, so it has the economic responsibility to open up to new markets and new scenarios, and take advantage of the consolidation of yuan as currency in the international market.
Venezuela made the move from dollars to yuan after U.S. President Trump imposed sanctions, blocking U.S. citizens from buying new debt from Venezuela or from its state oil company, PDVSA.
The only country that has so far reported the price of a barrel of oil in yuan is Venezuela. It is a bold decision that may be followed by other oil-producing countries worldwide.
Economist Luis Enrique Gabasud says China has been planning to move U.S. monetary domination towards the Euro-Asian bloc for decades.
China has the support of Russia and of other countries like Venezuela. China seeks to manage a financial system that does not rely heavily on the dollar, but rather on the yuan.
For now, Venezuela's oil company PDVSA debts are still denominated in dollars, and for now, that's how PDVSA will have to pay bondholders. And that makes Venezuela vulnerable to new economic sanctions that could freeze assets.
They have control over the international payment system, but we have some alternatives that have been developed with allied countries such as China and Russia, in order to make our international payments possible.
Venezuela and China are partners in 4 oil companies in Venezuela, and they are developing a refinery in China with plans to process 400,000 barrels of Venezuelan oil a day.
The yuan is not as liquid as the dollar, but with close trade ties to China, Venezuela can use its holdings of yuan to buy industrial products from China, continuing to distance itself from the U.S. and the domination of the dollar. Juan Lamas, CGTN, Caracas.